Hi everyone, welcome to FOREX Trading Empire YouTube channel. In this video, we're talking about the 9 a.m. CRT model with entry model. We'll be discussing on what is CRT, identifying the premium and discount array, how to anticipate the next 9 a.m. candle with CRT, and entry model. Before I start, make sure to like and subscribe to the YouTube channel. First, we'll talk about what is CRT. So I already did a video on CRT, which there'll be a link pumping up. You can click onto the link and go where there's a full video where I explain what is CRT, talked about CRT and show how it works. I'll be doing a brief explanation on this video. So candle range theory is the act of understanding that every candle is a price range in which there's going to be an open, low, high, close, and an open, high, low, close. So how to use CRT to anticipate a reversal. In a CRT reversal, when the first candle opens and closes, and the second candle runs out the candle's low and closes in between the range of the first candle, then you'll be anticipating the next candle, that's the third candle, to go for the candle's high. Go for the first candle's high. And that is a reversal from a bearish to a bullish trend. The same thing goes to from a bull to a bearish trend. The first candle is the range candle. The second candle is running out the first candle's high and closing between the range of the first candle. Closing inside the range of the first candle gives you a bias of the third candle where you will anticipating lower prices. How to use CRT to anticipate a trend continuation. If the second candle closes above the first candle, you will anticipate the third candle to create a high higher than the second candle. That is, if you are looking for higher prices. If you are looking for lower prices and the second candle closed below the first candle, you'll be anticipating the third candle to create lower low. That is, if you're looking for a bearish trend. So more on CRT is already, I did a full video on CRT where I went into in-depth on each of these CRT model. So make sure to check the description or there'll be a link popping up of the video. Now, how to trade the CRT model. First, you need to learn how to identify your premium and discount array. In this chart, you can see price running out the buy side liquidity. You can see this candle running out the buy side liquidity. Then the candle was aiming for a retracement. The next candle did not retrace. The next candle took out the candle's low, then traded into the range. So the 9 a.m. model, you'll be anticipating the 9 a.m. 4-hour candle. This is the 4-hour time frame of Euro USD. You'll be anticipating the 9 a.m. 4-hour candle, where you'll be looking for a power of 3 after getting your bias. In this scenario, we are expecting higher prices because the second candle, which is the candle that run out the CRT low, closed inside the range of the first candle, which is the CRT candle. You'll be anticipating the third candle, which is the 9 a.m. candle, to create higher prices, where in the lower time frame you'll be expecting a power of 3, where price will be going for lower prices, then creating a high, creating a judo swing. Moving to the 15-minute time frame. So after identifying, knowing the next draw on liquidity, knowing where the next 9 a.m. candle is going from the 4-hour time frame, then you go to the 15-minute to wait for a run on liquidity, run on opposite side liquidity. You can see the 9 a.m. open price. You can see a line indicating the 9 a.m. open price. Then you're waiting for price to run some sort of liquidity or run into a liquidity pool, either a fair value gap or a sell side liquidity if you're looking for buys, which in this example, I was looking for buys. You can see how price opened, traded lower, taking out the sell side liquidity. when trading the 9 a.m., if you don't have a bias from the higher time frame, where clearly you can see in this example, I have a bias. The first candle, which is the 1 a.m. candle, run at the buy side liquidity, closed. Then the 5 a.m. candle took out the 1 a.m. candle's low and traded into the range of the 1 a.m. candle, making it a CRT candle, where price already took out the low. And now I'm aiming for the 9 a.m. to go for the CRT high, which I'm anticipating higher prices. If you don't have a bias, you should not trade the 9 a.m. candle, because remember, it's after the 8:30 news. Make sure you have a bias. You're already outlining your premium and discounts. You can read price and you're anticipating a specific direction before taking the trade, aiming for price to trade to another liquidity pool, either a high or a low, which in this example was anticipating higher prices to take out the CRT high, which is the 9 a.m. candle. On the 15 minutes, you'll be looking for a shift. You'll be looking for a run on liquidity before a shift of structure after the opening price of the candle, which is the 9 a.m. opening price. So after the opening price of the 9 a.m. candle, you'll be anticipating price to run some sort of liquidity. You can see how price traded lower, running out the sell side liquidity. After the run on the sell side liquidity, then you look for your entry. You can either enter strictly from the 15 minutes, you just look for an impulsive move, then you join on the leg on the impulsive move, targeting the CRT high. Or you go to lower time frame, like the 2 minutes or the 1 minute. In this example, we'll be zooming down to the 1 minute. So on the 1 minute, you can see the run on the sell side liquidity. You can see our price traded lower, taking out the sell side liquidity. After price took out the sell side liquidity, you can see our price traded through this fair value gap. Price have moved from a discount higher. We're anticipating, as soon as price gets to a discount, we're anticipating higher prices. You can see the retracement into the inverse fair value gap, and you can see the reaction away from the inverse fair value gap heading higher, where you'll be placing your stop at the low. So understanding that the 9 a.m. is going to be leading to the full day expansion, you're trying to catch the full day expansion after the opening of the 9 a.m. candle. You can see how price traded, running out the sell side liquidity. After you run the sell side liquidity, price traded higher through the fair value gap. You look for a retracement, which in this example I used in an inverse fair value gap. Price traded to the inverse fair value gap, then you aim for the CRT high, which will be your target, while taking partials as soon as price are taking out the swing point. So understanding the CRT model will be one of your biggest advantage, which there's a video I made in this YouTube channel. You just subscribe and go through my past video. You will find a video where I talked about what is CRT and I explained everything about CRT. Then you go through the video to understand more on CRT so that you can apply the premium and discount array with CRT to know the next 9 a.m. candle direction. Knowing the 9 a.m. candle direction will give you a bias where going into lower time frame, you're just waiting for a power of 3 where there's an accumulation at the opening price, then a trade against the main trend where price will be manipulating price. Then after the manipulation, you look for your entry, which is how we got into the trade on the 1 minute. After the manipulation, running out the sell side liquidity, we look for an entry at the inverse fair value gap, and you can see the retracement to the inverse fair value gap, and we're aiming for higher prices. So that is all for this video. Make sure to like and subscribe. See you guys in the next video.